Hey, what's up, everybody? My name is JC, and I'm a cryptocurrency trader. I've been dabbing in Bitcoin for a while, but it wasn't until October 2023 that I started taking trading seriously. That's when I really committed. I started trading after work, staying up late, studying the charts, and putting all the efforts. And fast forward about a year and a half, I have achieved financial freedom. I was able to quit my 9 to 5 job, and now I live life on my own terms, completely free in time and space. And these days, I'm all in on Bitcoin trading. And now I'm launching this YouTube channel to share my insights with all of you. So, what can you expect from this channel? Straightforward, Bitcoin trading. No fluff, no hype, just raw, real analysis from someone who's been in the game and made it profitable. So let's not waste any time and let's dive into what's happening right now in the Bitcoin market. So this is the 4-hour Bitcoin chart. Bitcoin hit a new all-time high of 112K on May 22nd, I believe. And naturally, right after, we saw some profit taking and price pulled back to around 103K. Then the market chopped sideways until June 6, when tensions between Elon Musk and Donald Trump triggered a sharp drop to 100K level. So this 100K level right here is a really strong support level, so I'll keep this marked. But the recovery, it was pretty quick as both parties toned down their language. This entire dip seemed like just a noise. And then came some optimism from easing US-China trade tensions, which had the market looking bullish again. And it seemed like it was aiming for a new all-time high again. There were a few attempts. There were 1, 2, 3 attempts to try for another all-time high. So it was looking pretty good until, boom, a new conflict broke out in the Middle East. So Bitcoin again dipped to 102K level, and now we're back in consolidations. So what is next? Let me cut to the chase. I'm still bullish. I tell you, you should really avoid betting against the trend carelessly. If you have been paying attention this cycle, you'll definitely notice, unlike past ones, we're not seeing massive violent crashes that wipe out retail. I mean, sure, we have seen some few 20 to 30% drops, but they've been much fewer, slower, and more controlled than in previous cycles. What are we seeing instead then? Go up, sideways, go up, sideways, up, sideways. Instead, we're getting long, drawn-out sideways actions. And this actually is one of the strongest psychological strategies that market makers use to wear people down over time. And what does this mean for us? This means that we're likely to stay range-bound for a while. Something like this. I mean, yeah, we'll probably see some fake-outs to shake up retail traders. For example, something like this maybe, but the macro trend is intact. So how should we position ourselves here? I mean, if we agree that the big picture is still up, that the bull cycle is not over yet, our job becomes really simple. Our job is to manage risk, enter smart. And how do we do this? Here's how I'm doing. From here, you gotta really pay attention. As I said, I'm still bullish on the overall trend, but expecting this sideways range to continue for a while. So it makes perfect sense for me to split the capital into two parts. One is the main long position, which is open for a longer time frame. So this is the long position. This is the main position. It's for a longer time frame, and this will take up most of the capital. So about 80% of my capital goes into this position. And the other is a smaller position, the quick trade position, I would say, that I can trade more actively. So I would call this quick trade position for a shorter time frame, because it's quick trade, and about 20% of my capital seems about right. And this is risk management and positioning smartly. Okay, and let's start with the long position, the main one. So I'll be entering the long position gradually, scaling in within this range box. So I'm building a long position here inside this range. I'll write it down here. Enter long. This box range, okay? And where's my stop loss? My stop loss is at 100K, a strong psychological support level, as I mentioned earlier. It held during the Musk-Trump drama and also held during the recent Middle East scare. But here's the thing. Everyone knows that 100K is a support level. So market makers might try to trigger a fake breakdown to bait weekends. For this case, what we can do is we can split the stop losses. The first one, the half of the position cuts at 100K, the other half at the next strong psychological support level, which is the 200-day moving average. The 200-day moving average is now at around 95, 96K, and by the time it'll reach about 97K. So this is our second stop loss. Half cuts at 100K level, the other half cuts at 97, which is the 200-day moving average. Pretty straightforward. Next, for my smaller quick trade position, this setup is all about scalping within the range. So trading short term inside this box. When price approaches the top of the range, I look to enter a short position and take profit near the bottom. When it comes down to the lower end, I enter a long position and exit near the top. The goal is to take small, quick profits as price moves back and forth within the box. Stop loss levels are also clearly defined. For the long position, the stop is near the previous low, around 100K. For the short, it's near the previous high, around 112K. And again, this is a smaller size position. No more than 20% of total capital should go into this trade. I mean, it really depends on how you manage your risk, but for me, 20% seems about right. And again, importantly, we have to understand this game. Our main position is this long position, right? That said, I honestly don't even think that we'll see a clean break below this 100K level. Here's why. Market makers are not dumping large positions anymore because retail investors have learned that dips are buying opportunities. So what's the new tactic? Dump the altcoins instead, even majors like ETH and SOL. A lot of retail investors are investing in altcoins, and if they dump the altcoins, it can kill the overall sentiment of the crypto market, which can force retail to panic sell everything, including Bitcoin. Meanwhile, Bitcoin just moves sideways like this. That's the pain distribution 101. Altcoins bleed, Bitcoin bores. This market is a mental game. You can't predict every move. It's literally impossible. But if your risk is defined and you stick to your plan, you will not get shaken out mentally. Let me give you an example. So our stop was at 100K, right? The first stop. We enter long position here, so the average buy price would be about 104K. The price dips to 102K, but we panic and sell early for no reason. This is not a strategy. This is fear, and market makers prey on that fear. If we hit our stop at 100K, no shame. Take the loss and move on. It means we followed our rules, and this mental discipline is exactly what allows us to bounce back stronger in the next trade. And I promise this is so important. Back to our positions. I'm currently running 2 accounts, one for long-term position, open a long position within this range, stops split at 100K and the 200-day moving average. And for the quick trade account, this is pretty straightforward as well. Long near support, short near resistance. Long position, take profits near the top. Open a short position near the top, take profit near the bottom of the box. And for me, I'm using 2 exchanges. I use BitGet for long-term position. So this one I use BitGet. And quick trade positions, I use Bybit. And if you want to sign up for Bybit or BitGet, the platforms I personally use, make sure to use my referral links in the description. I secure the highest fee discounts directly from the exchanges, so I can confidently recommend them to you. With BitGet, you automatically get a 50% discount on trading fees. Basically, you're paying only half the fees. Bybit is a bit less generous. They offer a 20% trading fee cashback, which is paid out every Monday. I guess it makes sense since Bybit is a larger exchange, but both are major exchanges with massive global user bases. From what I know, BitGet is ranked around 6th in the world, and Bybit is likely the 2nd largest. And of course, you'll need to enter a referral code to unlock the fee benefits. So the referral code is JC777. Just type in when signing up on either exchange, or better yet, just use the links below and you're good to go. If you want to trade on a major exchange and get fee discounts as well, you should definitely check it out. And yeah, that's it for today's breakdown. If you found this analysis helpful, hit that like and subscribe button. It might just get me hyped enough to drop the next video even sooner. More to come, real insights, real strategies, no BS. Trade smart, stay sharp, and I hope every single one of you makes it in this cycle. Good luck out there and see you next time.